Good morning, Richard here. I'm sure you're aware of the inheritance tax rule, the 7-year ruling, where if you make a gift outright to a family member or a friend, if you survive the 7 years, it's commonly known that that gift then falls outside your estate. But today I'm going to take a little bit of a look at the 14-year rule. So it could be that you have to look back 14 years before calculating your inheritance tax due on any gifts that you've made. So let's just take a step back. So any gifts that you make can be potentially exempt transfers. So that is an outright gift that you make to a family member or a friend or whoever, and then if you survive the 7 years, then that gift falls outside your estate completely. So that's a potentially exempt transfer. So most of us are kind of aware of that 7-year ruling. The other kind of gift that you can make for inheritance tax purposes is a chargeable lifetime transfer. And that's basically a gift into a discretionary or a flexible trust. I'm not going to go into trust today, but a chargeable lifetime transfer is a gift that you make into a trust, a discretionary trust. So potentially exempt transfer, outright gift to somebody or an absolute trust, survive the 7 years, falls outside your estate. Chargeable lifetime transfer, a gift or a transfer into a discretionary or flexible trust. So that's chargeable only if that gift goes over the nil rate band, the 325,000, where there's no tax to pay as long as you stay under the 325,000. So those are the two types of gift that you can make for inheritance tax purposes. Okay, so we have to now calculate what kind of tax is due, inheritance tax due, is on those gifts that you've made through your lifetime. So the best way of explaining this is an example. So we've got a fictitious client called Bill here, and we have to calculate what the inheritance tax might be on all of the gifts that he's made in lifetime. So let's just go back, we're going to go back 14 years, okay? So 10 years ago, Bill makes a £100,000 gift to a discretionary trust. So £100,000 to a discretionary trust 10 years ago. So we're working out what the situation was at that time. So that's a chargeable lifetime transfer. So we have to calculate what his nil rate band, his 325,000 was available. So we assume that he had the full amount. So £100,000 is a lot less than 325. So there was no tax to pay when he put that £100,000 into a discretionary trust at the time. Okay. 6 years ago, Bill then made an outright gift of £150,000 to his son. So as we've already explained, that's a potentially exempt transfer. So as long as Bill survives the 7 years, there'd be no tax to pay on that gift. So, okay, so then we move to 4 years ago. So at that time, Bill decides to give another £150,000 to his daughter. Again, that's a potentially exempt transfer. So at the time, Bill's thinking, as long as I survive the 7 years, that £150,000 is outside my estate. So actually in lifetime there's no inheritance tax to pay as we're going along this chronology. Now Bill dies. So Bill dies today. So we've already established that there's no inheritance tax in his lifetime, but now we have to go back through all of his gifts to calculate or recalculate any inheritance tax due on any of those gifts. So we go back all the way, we go back 14 years, and then we start working our way forward to see what gifts Bill made during that time. So Bill made a £100,000 gift to a discretionary trust 10 years ago. So that is 10 years, so he survived the 7 years since that gift. So that is outside his estate completely, that gift that he made to the discretionary trust 10 years ago. So that's great. We move to the next gift 6 years ago. Now the gift he made, the £150,000 gift that was previously potentially exempt, now becomes chargeable because Bill didn't survive the 7 years. So now we put ourselves into that position 6 years ago, and now we have to calculate how much of the nil rate band, how much of the £325,000 Bill had 6 years ago. And this is where the 14-year rule comes back, because there we have to go back to see how much of the nil rate band has previously been used at that point in time. So we can see that he's already used £100,000 at that point in time for the gift into the discretionary trust, and he's used up £150,000 for this new gift to the son. So that's 200 at that point in time. That's £250,000 that he's used up of his nil rate band that is now a chargeable gift. So it's still underneath the nil rate band, so that gives him £75,000 of nil rate band available at that point in time. So there's no tax to pay, even on death, on those first two gifts. Now we move to the gift 4 years ago. So now we put ourselves 4 years ago, the £150,000 gift to the daughter, which was previously potentially exempt. He's not survived the 7 years, so that gift there now becomes a chargeable gift. So we put ourselves into this position 4 years ago, and we count back 7 years to see what other now chargeable events have used up the nil rate band at that point in time. And now we can see that 100,000, 150,000, that's 250, 350, £400,000 now worth of gifts have become chargeable at that point in time. So that means that there's 75,000 over the nil rate band 4 years ago. So there's tax to pay of 40% on the £75,000 4 years ago. So there's tax now that previously wasn't the case, now on the gifts that he's made previously. And then finally, so we've calculated the tax on any gifts, and now we calculate the tax on the estate itself. So we, completely different discussion, but we talk about the estate, the assets that he has on death. We go back 7 years, so the 10 years, so that gift that he made 10 years ago is now complete outside of his estate in terms of calculating the tax on the estate. But we can see that now there's two chargeable transfers now of a total of £300,000 on death. So that only leaves Bill with £25,000 of the nil rate band available to set aside the inheritance tax on his estate in total. Okay, I hope that's been clear and not too confusing and technical. It can get quite involved. I think the main thing I want to highlight is that it can get quite involved in terms of the chronology of the gifts you make. It really highlights the importance of keeping a really good record of the gifts that you make in lifetime to enable you and then eventually your executors and beneficiaries to calculate the inheritance tax position on death. I would strongly recommend that you use a professional like ourselves to calculate inheritance tax on death and go through the probate and estate plan with you at that time. But I hope this is a useful explanation of the 14-year rule. So it's not just 7, it's actually a 14-year rule that we have to take into account. If you have any questions about your own individual circumstances or situation, or if you've had a family member who's died and you're looking to kind of organise and calculate the inheritance tax and the estate in total, please let us know, pop by, you know where we are, see you next time. Okay, bye.